Well, thank you very much for coming. And Lou, thank you very much for inviting me.
Thanks.
Lou asked me to put together some slides or some items really together on what I thought mattered to business people as far as the money management is concerned. And so after 40 years in financial services, I sort of thought, what could I actually talk about? So Lou gave me a kick in the bum and asked me to get a few thoughts together, which I've done. So money matters in business, and these are some of the important ones that I sort of thought was appropriate to us. Before I get too far, we've got a general advice warning, so obviously disclaimer. In my profession, of course, you've got to be very careful what you're saying to people, and I don't want you walking away from this morning's session thinking it is actually personal advice to you personally, because there might be circumstances in your own lives which aren't appropriate to what I'm going to say in the presentation, so it's just general nature. So the first area I thought I'd tackle is insurance considerations. So obviously the most important one, I guess, was a few important ones, but life insurance for most people. If you haven't got life insurance, I'm looking at a couple of people in the room, but that's okay. Life insurance, very basic, but people forget to review their circumstances. You know, do you have business debt? What's going to happen? Should something happen to you as far as passing away? Are you leaving a debt to your family? What's going to happen with that? Buy-sell agreements, that's if you're in partnership with people, and sometimes you've got, say, two men or two women in business, and their particular spouses are not involved in the business. Something happens, one of those people pass away. What happens to the business then? If you've got insurance in place to pay out the other person, then it makes it very clean as far as passing away and funding the payout of that other partner to the spouse. So the spouse of the person that's passed away will actually receive some money and relinquish any interest in the business. Otherwise, we've seen scenarios where the spouse gets involved in the business and it ends up not being a very good outcome. So we look at life insurance and buy-sell agreements for that purpose. Income protection insurance, it's one that I guess most people understand. It's very important, and sometimes as we get older, it does come a little bit expensive, but it's probably, if not other than life insurance, is the most important insurance to have. So income protection insurance, do you all have an understanding what income protection insurance is?
It's going to pay me if I can't work.
Yeah, so sickness or injury.
Yes,
sort of
accident, illness, yes,
unfitment,
exactly right. No,
not holiday.
yeah, that's
Not holiday? Damn it.
Yeah.
spot on. It is if someone, if you suffer an accident or illness and you can't work, you have an income protection policy with an insurance company, they will pay you a predetermined amount per month for a period of time that you're unwell. And we have various, whether it's a waiting period, we call it could be 30 days, it could be 90 days, it could be a bit longer. So therefore, the longer you have that waiting period before they start paying you, the cheaper the premium. Conversely, what I call a benefit period, how long that benefit period lasts, could be 2 years, could be 5 years. Obviously, the longer period is more expensive. So if you, for argument's sake, so you break a leg and you're out of action for about, let's say, 6 months. So you've done your waiting period, the insurance company's paying you that incremental income each month. That carries on, that allows you to either feed your family, pay your bills, or even help, maybe even hire someone to go into the business to replace you for that time. You get better and your leg's repaired and you go back to work. The insurance company will stop paying you, and then you just get back to paying the policy. 2 months later, you're a very unfortunate person, you break the other leg. You can then go on another claim, and once you've waited that waiting period, then you go on claim again until such time as you're well enough to return back to work. So that's the income protection policy, a very, very important one. If you haven't got it, as business owners and managers, it's probably, I'd say, other than life insurance, it's probably the most vital insurance to have. Sometimes people will say they've got, other types of insurance in place that cover them if they have an accident or, workers' comp type scenario. Well, income protection, of course, is 24/7. Your workers' comp is generally if something happens to you in the workplace in that time frame. So it's a much more better policy, more comprehensive, and to be honest with you, there's no questions. Once you've got that policy in place, it's a better premium type of policy. And of course, disability insurance, as it says, if you unfortunately become disabled, you need some sort of insurance in place to cover you for that event. Any questions on insurance before we move on?
I've got a question about disability insurance.
Yep.
What is that, because you are never going to return to work as opposed to income protection?
Yeah, disability insurance, that's a good question, Lee. So income protection insurance will pay you for a designated period of time or until you become better, you're well, and then return back. So it's in increments, so each month you'll get a sort of a payment. With a disability or life cover, but disability cover is a lump sum, so you need to be, and quite often be totally and permanently disabled in a lot of cases. Just depends on the policy. It's a lump sum, so we have to work out how much you think a lump sum will be appropriate for your needs. And once it's been paid out, that's the end of the policy. That's the difference between income protection and disability.
So what happens? Income protection. We got no income. We haven't paid ourselves yet, so we'll be protected.
Yeah. So what happens is if so when you go and get a policy, the insurance company will say to you, well, what is your income?
Yeah.
You know, how much income are you drawing? And so obviously you come up with a figure.
Yeah.
And quite often what they'll do now is they'll say, okay, well, you're telling us you're drawing 80 grand a year. We're going to pay you 75% of that income. That's the maximum they'll pay you, 75% of that gross amount. And so that's okay. That's all set up. The policy's put in place. And when time to claim, quite often they'll now say to you, with the new policies coming out, you need to prove to us what income you've been earning. The old policies, which were a bit better, until the government decided to change the rules on us, was the case you could set up an agreed policy, prove your income, and that was a guaranteed thing. These days, that's changed. So now it's the case, I'm saying I'm earning $80,000 a year, you're paying the premiums on that. When it comes time to claim, you've got to show the insurance company that you've been earning $80,000. If you've been earning $100,000, they're not going to cover you for $100,000.
That's it.
And if you've been earning 60,
yeah, that's it.
So it's based on your drawings, as a, like, so say you're a business owner, like all of us in the room, it's based, you can do it on what you draw from your business.
what you draw on your business.
As opposed to just a wage.
Yeah,
Okay.
that's right. So you need to justify justify for your financials as to what you've been earning, however you want to describe that. So that can justify for it to the insurance company. They're pretty au fait with reading financials and understanding.
That's a relief.
Well,
Not that I have any.
Basically, in this year we haven't done any drawings.
It's a very extraordinary year, isn't it? And my understanding is a lot of insurance companies have been very fair under the circumstances. Superannuation, one of my favourite topics. I know it sends most people to sleep, but I really, after so many years doing it, I finally understand it. And so I want to just cover off in this area quite a bit of information here for you as we discuss through it. And I'm happy to take your questions as you go through. So, what's your thoughts on superannuation? What do you think about superannuation?
It's very important.
You get a gold star on that.
Thank you.
Why is it important?
Because one day you will retire, and if you don't plan for your retirement, you will have a different lifestyle than you're accustomed to once you retire.
Yeah, 100%. People forget about it, mate. You think that you've got all the time in the world. You know, you're in your 20s and your 30s, 40s, next thing you know, you're in your 50s, and all of a sudden you go, wow, you know, where's that 20 years gone? And you go, well, add another 20 years on where I am now. I've got to start doing a bit of planning here. So, well, that is 100% correct. So, what a lot of business people I find don't do is they don't pay themselves first. In other words, they don't pay super. Everything else is more important. So they don't, you know, they don't even give it a thought. I mean, when they've been an accountant, I had that many clients that, you know, tradespeople, my son included, Dad can't afford superannuation, but other things to do. You really have to turn that thinking around. If you're working for somebody, you know yourselves, you have to pay 9.5% of their gross income into super. So why not pay yourself? If you're drawing that from your business, why not put 10% of what you're drawing, you know, your wages from your business into superannuation each year? And the earlier you start that practice, as Juanita quite rightly said, the better off you'll be, compound interest and all the rest of it. So pay yourself first is probably the golden rule. A lot of business people do not do very well. So change that way of thinking. Contribution caps, I won't bore you too much in the sense that it can be a whole topic on superannuation, whole presentation on superannuation, but basically a tax deductible contribution to super is $25,000 a year at this point in time. So what happens is the money goes in, it comes off as an expense from your business, but then when it goes into the super fund it's taxed at 15%. So tax deduction to the business, tax as it goes into super. Alright, so it's $25,000 each is your cap. Any questions?
Thank you, Kevin. In the case of an employee, the 25 grand, does that include the 9.5?
It does.
Okay, thank you.
It's a good question because if you know, we've talked to various people with different backgrounds. So if we talk to one of your staff members and they say, look, I'm getting 9.5%, what we call SGC, super guarantee, from my employer, but they've got enough cash flow in their finances to say, I wouldn't mind salary sacrificing. They can actually top up, so what you're paying them plus what they want to sacrifice, up to a maximum 25 grand combined with all those contributions from those different sources. So 25, there's a very new sort of conditioned environment coming with this contributions is that last year if you did not use your full 25, so let's say, I'll just make it up, say you use 20, you can actually bring that 5 forward into this year. So this year you've got 25 plus 5 from last year, so that's 30. What's happened a very long time ago, the government allowed us to put lots of money into superannuation, tax deductible. At one stage it was up to $100,000 a year that you could put in, and it's gradually been eroded down to 25. And when you get to a certain age, like myself, you know, you'd like to start putting a bit more into superannuation because your retirement is closer. So I think they're starting to work towards some areas which will help us catch up a little bit. And also some of the areas, like when some of the women leave the workforce for a period of time, they have their family. There's a period of time there they haven't been able to put money into super, so there's a bit of a catch up. They can go, well, it's going to be a 5-year rolling term. So, you know, Juanita's out of the workforce for a while, she says, I'm raising my family. 2 or 3 years down the tracks and go, well, I've now got this period of time that I can actually make up that many number of 25s to make a lump sum if you had that sort of money, you know, so it's a catch up. So
That's cool.
That is very cool.
So it's covering women mainly for those circumstances, and it's also covering for people taking a gap year or year out, you know, whatever they want to do, and also of course people getting a bit older, closer to retirement, catching up and they want a bit more money as they get a bit older. So that's contribution caps. There are other caps involved, how much you can get money into super, but I won't go into that detail today. Business property and self-managed super fund. It's probably one of the best strategies for a business owner that we can use, but it doesn't suit everybody. So what I'm trying to say there is whether your restaurant, whether you're a panel beating person, got a workshop, whether you're a professional, you've got an office. Through your self-managed super fund, so basically you've got a super fund, we can create what's called a self-managed super fund, and we help you with that side of things. You can actually buy your commercial property inside your self-managed super fund, and you can still work in your business, and your business can pay rent to your self-managed super fund. So it's a very smart way of accumulating wealth, retirement wealth, because you own that building via your self-managed super fund. You've got to pay rent anyway to somebody, so you might be paying to yourself. So your money's going in for rent, plus you're making contributions up she goes.
So that rent goes in as essentially
Income.
free income
Yeah.
into your super.
Nothing to do with the cap, nothing to do with contributions.
So realistically, if you were in a business that you owned a property, but you weren't necessarily in a financial situation to be paying yourself superannuation at that time, if you're renting from your business property, you're still putting money into your super and growing your super. Is that right?
Yeah.
Oh.
So if you own a premises, a commercial premises inside your super, and then you're also happen to be the tenant of that, which makes sense, of that building, the rent that you would normally pay, let's say it's 20 grand a year, to somebody else, you're actually paying that to your super fund. It's not a contribution, it's actually a return on investment, it's an income to the fund, plus you can make your 25 plus 25 as contributions into the fund.
So if you have a big balance in an industry fund, you can use the capital in that fund to buy the property.
Right,
Yeah.
okay. Wow, alright.
There's a couple of ways of doing it. One is quite right. If you had sufficient cash already in the industry in a fund, and we basically transfer that into a self-managed. The self-managed going to buy the property. There are some borrowing rules. The self-managed super fund can actually borrow, so you might have half the amount of money. You want to borrow half. There are some conditions around that, which we can give information on that as well. You can do that, or transferring assets in. So there's a number of different ways we can look at it, but it's probably the most smartest strategy a business person using the superannuation can use. So that's business property in self-managed super fund. Deductible, as I mentioned, that obviously you're making a contribution to super, it's deductible, it's coming off your bottom line. Sale of business, retirement planning. So there's some very complex rules around when you sell your business. You can actually use the sale of business proceeds in different categories. If you've been in business for 15 years, etc., there's various rules that the accountants will know. But effectively, what we have to understand is that if you think about retirement planning, you think, well, why am I doing this business? I'm doing this business, A, I enjoy it, B, revenue, and C, eventually it's going to be my exit plan. I'm going to retire. So we look at, if you sell your business down the track and you've got this lump sum, forget about the 25 grand going in, you can actually put in, I think it's about 500,000 a person into superannuation under the retirement component, if you like, retirement exemption, which means, all things like capital gains tax are exempt and all those sort of things. So there's certain rules, it's quite comprehensive, but just know that at the end of the rainbow, you sell your business, you can use those proceeds to top up your super. And why top up your super? Super is the most tax effective income stream that we have in the Australian system, as Juanita said. It's zero tax and pension phase income stream, no tax on earnings up to 1.6 million each. But effectively, it's another very good strategy. So that's the sale of business into as retirement planning. But probably one of the biggest lessons I've learned in the recent past is, as business owners, we think that our business is going to be worth a certain amount, and we're going to be able to sell it on the 30th of June. The year we turn 65, and we drive off into the sunset with a caravan in tow going around Australia. That's the big dream. That's the dream, and that's what everybody thinks. The reality is that, of course, we've got to find a buyer. The business has to be worth a certain amount. So the timing is everything, and sometimes, and I'm sure you guys have known people, and I know people who that was exactly their plan. They were at 65, sell my business on the 30th of June, 1st of July, happy days. But of course, whether it's the economy or whatever it happens to be, the particular situation at the time, no. Either A, the business isn't worth anything, just the plant and equipment, or they can't find a buyer, they will walk away. So the lesson behind that is this. That's really great. If that works out, that you're able to sell your business for something tangible, and use those funds for retirement, that's absolutely fantastic. But why not have a plan that, just in case that does not happen, as Juanita quite rightly said, chip away at adding to your superannuation, because that is the most important asset to have in retirement. So just pretend for a minute you have nothing from your business when you sell it. So how we should treat our businesses, I believe now, the other way of thinking is make those businesses our cash flow. That's what produces our cash flow in our journey. So we need to take enough out to put food on the table and look after our family, retire our debt, but also put enough in a pot. Whether you choose superannuation or choose another pot, but a pot that is money being put away and accumulated during your journey in business. Don't rely on your business to be the cash cow at the end of the rainbow. I hope it is, but it might not be. So that's probably the biggest thing to take away from today, is that be putting money away. Make your business the cash generator to allow you to put savings away, superannuation or otherwise. Any questions on that? No? Yeah, depending on your business. Cash flow. Cash flow obviously is cash is king. So I guess a recent lesson learned, which Juanita and I talk about all the time, is having a cash buffer. And I think the COVID situation probably really highlighted that more than anything else, that some people either run their family budget or their business budget, cash flow, on a very small margin, in the sense that there's nothing in the tank. It's really tight. If we don't get some income in soon, we're in the red. We don't want to live our lives like that. That's just too much stress. So the lesson learned is, obviously when you're looking at your business, you're looking at cash flow, you're looking at profitability. What I'm saying is kind of dovetails into what I said about super and putting money aside. But you really need to think about an emergency buffer, both for your family budget. Something can go wrong. Car needs repairing, replace the refrigerator, whatever it is. In business, the same. I know you're not getting much on cash today as far as investing it or keeping it in an account, but maybe there's some way through your accountant you can talk about how you can use it as an offset for debt or whatever the case may be. But that's another topic. But at the end of the day, having a cash buffer is probably another good business principle that you can really have for your business. Just, you never know what's around the corner. And surplus cash, what do you do with it? As I say, a buffer, and then it's a matter of thinking about, what do I do with that surplus cash? I came across a guy the other day, he's got 170 grand surplus cash in his business. Fantastic, really, really fantastic. But at the end of the day, what do you do? What's the best way to deal with that? Is it retiring debt? Is it putting some into super? And that's where we need to talk to a professional perhaps, and talk to someone about what do I do with my money? And that's where we look at different areas for you.
Excuse me, can I have a question regarding, a little bit going backwards?
Yeah, sure.
Is there a formula in relation to the buffer? So like if you've got X amount of cash flow or turnover, is there X equals Y kind of
Not necessarily.
formula, or is it different for every industry and business?
We're actually doing our workshop in a couple of weeks is on stress testing your cash for your business. So it's actually sitting right in perfectly with what Kevin said about your emergency buffer and your surplus cash. So Kingsley's going to run a 2-hour workshop where you'll bring your own financial reports and work live calculations with him on what it looks like to have a 20%, a 30%, where that sweet spot is for your business, of being okay and making sure that you're going to have that emergency buffer and not in a bad place either. So we thought that ties in really nicely with following on from this, and obviously with COVID having happened, and making sure that people can know how to stress test their finances themselves, because you can't always afford an accountant.
I think that's fantastic. It probably does answer the question, but I sort of, I guess at the end of the day, you know your business better than anybody. And if it's a matter of saying, look, what's my ongoing fixed costs? Maybe it's 3 months worth, maybe it's 6 months worth. Obviously, it takes a while to build up that reserve. But it's like your family budget. I always say to people, my son, he's a self-employed roof carpenter. I say, mate, if you can get 3 months worth of household income, which you need, and it's a buffer, fantastic. Then build it up to 6 months, just in case something happens. So it's no different in business. You understand your business figures, you know what goes out each month, if you can try and get a bit of a surplus there, just in case something happens, at least you can pay your bills and keep the system
Yeah.
going. But that's the great idea that you're doing
Yeah.
in Kingsley. Okay.
Thank you.
Question. So my only question I had, and I'm sort of on take your questions, but what keeps you awake at night about your business? So if there's anything, do you worry about anything? Do you sleep well?
I worry that I'm not going to have enough for retirement. And I live a pretty frugal life, so to be worried at the ripe age of 34 that I'm not going to have enough money,
Yeah.
because like you and I have spoken before, I have quite a healthy superannuation balance now, but I'm scared that that's going to run away or get chewed up with fees if I don't put enough in. And you know, because that's the other thing, is you can put money in your super, but if you don't put enough in to cover the fees to even just break even, then
Or if the investments don't perform.
and the investments don't perform, and
And that comes
am
down
I
to
rightly scared, Kevin?
Sorry.
Am I rightly scared? Am I in the right place of being afraid of my retirement and not having enough money?
I think it's a good comment to make as far if that's what's worrying you, and I think it comes back to what we were talking about before, that like the insurance conversation we had. It's important to have that annual review. So you know, if you've got a financial planner or advisor or someone that you trust to look over these, you know, your accounts, have a chat about it. What's my plan? What are my goals and objectives? How do I achieve those? And you sit down and we work out what can we do, put a certain amount away each month or each year. As when I said, is it invested in the right places? It's going to make me feel comfortable so I can sleep overnight. I'm not worried about the volatility of share markets. Are the fees appropriate to the type of super fund that I want to have? Because there's different super funds out there. You know, you've got the very vanilla industry funds which offer you very, very small basic options. They're going to be cheaper than another provider that offers quite a wide range of investments, which are a bit more flexible or transparent, depending on what the customer wants. So you're quite right to ask those questions. If that's a concern for you, then we need to address those, and they can be addressed. You know.
So we need to talk
Have
again.
another
So you need
review.
another meeting.
I need to go and meet. I need to come and meet with you again.
Need a review.
Yeah.
So it's a good one. And so if anything like that concerns you, you've got to go, why is this keeping up each night? Why am I worried about it? Jot it down. What can I do about it? Go and talk to someone that can help you with that problem. We'll put it all in perspective, you know. So, all right.
And I guess that's the wonderful thing of our Businesses program, which you guys are all subscribers of, is that you do get to go and see Kevin for free, one free session as part of being a subscriber. So,
Well, thank you.
yeah, so you get to go and hang out with Kevin, have your situation looked at, and
answer all the questions on the
ask
list.
any questions that else you have.
Yeah.
Awesome.
Lovely.
All right,
Thank
no more
you.
questions? Thank you very much.
I'm gonna